Based on the historical data and forecast, Bitcoin has been in a significant downtrend, with consistently low RSI values below 30, indicating oversold conditions. The forecast for the next week projects continued downward pressure, with prices falling to $58,800. The support price remains stable at $60,300, while the Bollinger Bands show the price trading near the lower band, confirming the bearish momentum. Considering this, I recommend a short selling strategy with an entry price of $66,100, a stop-loss price of $66,700, and a target price of $61,800. This strategy aims to capitalize on the anticipated further decline, using the RSI oversold signal and the Bollinger Bands as confirmation. To refine the strategy, we can incorporate a layered approach. Initiate a short position at $66,100 with a stop-loss at $66,700. If the price continues to fall, add another short position at $64,300 with a stop-loss at $64,900. The final target price for both positions is $61,800. This layered strategy mitigates risk and maximizes potential profits by averaging into the downtrend and securing profits as the price declines. This approach aligns with the current bearish trend and the projected price movements, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits a clear downtrend. The RSI consistently remains below 30, indicating oversold conditions, while the forecast suggests continued price decline. The support level at $1,940 has been tested multiple times, and the Bollinger Bands show the price trading below the lower band, confirming the bearish momentum. Therefore, I recommend a short selling strategy. We will enter a short position at $1,860. The stop-loss will be placed above the center of the Bollinger Bands at $1,980 to protect against a potential short-term reversal. Our target price is set at $1,540, aligning with the forecast and providing a substantial profit margin. To optimize the portfolio, we will implement a tiered approach. The initial position at $1,860 will be 50% of the total capital. If the price declines to $1,700, we will add another 30% of the capital to the short position, further capitalizing on the downward trend. Finally, if the price reaches $1,600, we will add the remaining 20% to maximize profits. This strategy combines the RSI, Bollinger Bands, and forecast data to create a robust and adaptive trading plan with clear entry, stop-loss, and target levels. Based on the historical data and forecast, BNB is currently in a downtrend, consistently breaching the lower Bollinger Band and exhibiting RSI values well below the oversold level of 20. The recent forecast for the next week indicates a continuation of this downward trend, with prices projected to fall further. Therefore, I recommend a short position strategy. Entry price should be $602, placing the stop-loss at $636 to protect against a potential reversal. The initial target price is $529, aiming to capitalize on the projected downward momentum. To refine this strategy, we will incorporate the RSI and Bollinger Bands. When the RSI reaches an oversold level of 20 or below, it signals a potential bounce. However, given the prevailing downtrend, we will wait for a confirmation of the downward trend by the price falling below the lower Bollinger Band. If the price reaches $554 and the RSI is below 20, we will consider closing the position and taking profit. This approach combines technical indicators to enhance risk management and maximize potential returns, targeting $529 as the final profit target. Based on the historical data and forecast, Solana shows a clear downtrend. The price has been consistently declining since January 30, 2026, and the forecast for the next week indicates further downward movement. The RSI consistently remains below 30, indicating an oversold condition, but the downward trend persists. The Bollinger Bands are also widening, suggesting increased volatility and a potential continuation of the downtrend. Therefore, I recommend a short selling strategy. Enter a short position at $77.7 with a stop-loss at $83.1, which is the recent high. The initial target price is $70.8 based on the forecast. To optimize the strategy, I will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches $70.8, I will move the stop loss to break even, around $77.7. If the RSI reaches 20, I will consider covering a portion of the position to secure profits and reduce risk. The final target price will be $61.3, aligning with the forecast's lowest point. This combined approach leverages both the overall trend and short-term technical indicators for maximum profitability and risk management. Based on the historical data and forecast, TRON shows a slightly downward trend with consistent support at $0.278. The RSI consistently hovers around the 30 to 40 range, indicating neither strong overbought nor oversold conditions, but nearing oversold territory. The Bollinger Bands have been contracting, suggesting decreasing volatility. The forecast for the next week projects a stable price around $0.28. Given these factors, I recommend a cautious long position strategy. We will enter a long position at $0.279, placing a stop-loss order at $0.278, just below the support level. The initial target price will be $0.286, aiming to capture a modest upward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll enter a long position at the prevailing price, with a stop-loss at $0.275 and a target price at $0.285. Conversely, if the price touches the bottom of the Bollinger Bands, we will enter a long position at $0.278, with a stop-loss at $0.276 and a target price at $0.284. This combined strategy leverages multiple indicators for enhanced risk management and potential profit maximization. Based on the historical data and forecast, Dogecoin demonstrates a downtrend, with the price fluctuating between a support of $0.0914 and a resistance of $0.119. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with values frequently dipping into oversold territory below 30. The Bollinger Bands show the price trading near the lower band, further confirming the downward trend. Considering these factors, I recommend a short selling strategy. The entry price will be $0.0931. The stop loss will be set at $0.0966, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price is $0.0839, based on the forecast for February 19, 2026. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI falls below 20, oversold, it signals a potential bounce, but in this downtrend, it's more likely a temporary pause before further decline. When the price touches the lower Bollinger Band, it indicates a potential short-term oversold condition. Combining these, if the price reaches $0.0878, which is near the lower Bollinger Band and RSI is below 30, consider a partial profit taking and tighten the stop loss to $0.0914, the support level. This adaptive strategy aims to capitalize on the overall downtrend while mitigating risk and securing profits along the way. Based on the historical data and forecast, Bitcoin Cash shows a downtrend, supported by the declining forecast prices and the consistent proximity to the support price of $453. The RSI consistently remains below 45, indicating oversold conditions, suggesting potential for a bounce. However, the forecast predicts a continued decline. Considering this, I recommend a contrarian strategy focusing on short-term gains. We will implement a buy strategy when the RSI reaches an oversold level of 20, aiming to capitalize on a potential short-term rebound. The entry price will be $491, with a stop-loss placed just below the support level at $458 to mitigate potential losses if the downtrend continues. The target price will be set at $532, near the recent resistance level, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band of $466 and the RSI is below 20, it signals a strong oversold condition. In this case, we enter a long position at $482. The stop loss will be $458, and the target price will be $532. This combined RSI and Bollinger Band strategy provides a more robust approach, balancing oversold signals with price volatility. The portfolio will primarily focus on this combined strategy, as it offers the most efficient risk-reward ratio, capitalizing on short-term fluctuations while protecting against significant downside risk. Based on the historical data and forecast, Cardano shows a clear downtrend. The RSI consistently remains below 50, with periods below 30, indicating oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the price is consistently near the lower band, reinforcing the bearish sentiment. The forecast for the next week predicts continued decline. Therefore, a short selling strategy is recommended. We will enter a short position at $0.254, placing a stop loss at $0.265, just above the recent high. The initial target price will be $0.228, aligning with the forecast price for February 19, 2026. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider tightening our stop loss to $0.256, the support level. Conversely, if the price touches the lower Bollinger Band and the RSI is below 30, it confirms a strong sell signal, allowing us to maintain the short position with a slightly adjusted target price of $0.239. This combined strategy leverages both technical indicators and the overall bearish trend to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink exhibits a clear downtrend. The price has been consistently falling, supported by the RSI consistently below 30, indicating oversold conditions. The forecast for the next week projects further declines, with prices reaching as low as $7.11. We will implement a short selling strategy capitalizing on this downward momentum. The entry price will be $8.16, coinciding with the first day of the forecast. A stop loss will be set at $8.44, just above the recent support level, to limit potential losses if the trend reverses. The initial target price is $7.11, aligning with the lowest point in the forecast. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the lower band, reinforcing the oversold condition. We will use a tiered target approach. Once the price reaches $7.71, we will take partial profits and move the stop loss to the entry price of $8.16. Subsequently, when the price hits $7.11, we will close the remaining position. This approach allows us to secure profits throughout the decline while mitigating risk with a dynamic stop loss. The overall portfolio will be 70% short Chainlink and 30% in a stable asset to hedge against unexpected market fluctuations. Based on the historical data and forecast, Stellar has been in a downtrend, consistently trading below the center of the Bollinger Bands and exhibiting low RSI values, frequently dipping below 30. The forecast suggests a continuation of this downward momentum, with prices expected to range between $0.142 and $0.153. Given the current oversold conditions, RSI consistently below 30, I recommend a contrarian strategy focusing on short-term bounces. We will implement a strategy with an entry price of $0.153, placing a stop-loss order at $0.157 to protect against further downside. The target price will be set at $0.142, capitalizing on the anticipated downward movement. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the bottom band, around $0.142, it signals a potential bounce. We'll enter a long position at $0.142, with a stop loss at $0.137 and a target price of $0.15. This strategy combines RSI and Bollinger Bands to maximize profit potential. The overall portfolio will favor the RSI-based strategy, allocating 60% of capital to the initial short-term bounce strategy and 40% to the Bollinger Bands-based strategy to capitalize on potential reversals. Based on the historical data and forecast, Ethena demonstrates a clear downtrend, confirmed by consistently decreasing closing prices and a forecast predicting further decline. The RSI consistently remains below 30, indicating oversold conditions, while the Bollinger Bands show the price trading near the lower band, further reinforcing the bearish sentiment. Considering these factors, my strategy is to implement a short position, anticipating a continuation of the downtrend. We will enter a short position at $0.112, coinciding with the support level and a highly oversold RSI of 25.3. A stop loss will be placed just above the upper Bollinger Band at $0.184 to protect against a potential short-term reversal. The initial target price will be $0.0925, aligning with the forecast for February 19, 2026. To optimize returns and manage risk, I propose a tiered approach. If the price reaches the initial target of $0.0925, a portion of the position will be closed, and a trailing stop loss will be set near the recent swing low of $0.0966. This allows us to capture further gains if the downtrend continues. For the remaining position, the final target price will be $0.08, a conservative estimate based on the continued bearish momentum. This strategy combines technical indicators, price action, and forecast data to maximize potential profits while minimizing downside risk, offering a high return opportunity in the current market conditions. Based on the historical data and forecast, Pyth network demonstrates a downtrend with considerable volatility. The RSI consistently fluctuates below 50, indicating a generally weak sentiment, with several dips below the oversold level of 20. The Bollinger Bands show that the price has been testing the lower band for an extended period, suggesting potential for a rebound but also reinforcing the overall bearish outlook. Considering these factors, I recommend a contrarian strategy focusing on short-term gains while managing risk carefully. My proposed strategy is a portfolio composed of 3 strategies. First, a short position entry at $0.0448 with a stop loss at $0.0467 and a target price of $0.0404. Second, when the RSI drops below 20, enter a long position at $0.0401 with a stop loss at $0.038 and a target price of $0.0459. Third, when the price touches the lower Bollinger Band, enter a long position at $0.0404 with a stop loss at $0.0386 and a target price of $0.0467. The most efficient strategy is the first one, so I will allocate 60% of the portfolio to this strategy, and the remaining 40% will be divided equally between the other 2 strategies. This portfolio balances capitalizing on the current downtrend with the potential for a rebound, incorporating both RSI and Bollinger Band signals for enhanced decision-making. Based on the historical data and forecast, Bittensor exhibits a strong downtrend. The RSI consistently remains below 30, indicating oversold conditions. The forecast for the next week predicts continued decline, with prices dropping to $124. Considering these factors, I recommend a short selling strategy. Entry price should be $145, coinciding with the established support level. A stop loss should be placed at $155, just above the recent high, to limit potential losses if the price reverses. The initial target price is $132, aligning with the forecast low for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading below the lower band reinforces the downtrend. If the price reaches $132, we can consider moving the stop loss to the entry price of $145 to secure profits and reduce risk. A secondary target price can be set at $124, based on the forecast. This combined approach leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. The portfolio is composed of a short selling strategy with an entry price of $145, a stop loss of $155, a first target price of $132, and a second target price of $124. Based on the historical data and forecast, Conflux exhibits a clear downtrend. The price has been consistently below the Bollinger Band center, and the RSI has remained largely below 30, indicating oversold conditions. The forecast for the next week predicts continued downward pressure, with prices falling to $0.041. Considering these factors, I recommend a short selling strategy. The entry price will be $0.0459, coinciding with the most recent closing price and the start of the forecast period. A stop loss will be placed at $0.0484, just above the recent high and the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price will be $0.041, aligning with the forecast low. This strategy combines technical indicators and future predictions to maximize potential returns while minimizing risk. The RSI consistently below 30 suggests a strong oversold condition, supporting the short position. The downward trend, combined with the forecast, provides a high probability of reaching the target price. This portfolio will allocate 60% of the capital to this short selling strategy, 20% to a conservative long position if the RSI reaches 80, and 20% to a neutral position, awaiting further signals. The expected profit from this strategy is substantial, given the current market conditions and forecast. Based on the historical data and forecast, Aave shows a downtrend. The RSI consistently remains below 30, indicating an oversold condition, suggesting potential for a bounce. However, the forecast prices continue to decline, pointing towards further downward pressure. The support price is consistently at $107, acting as a floor. The Bollinger Bands are contracting, indicating decreasing volatility. Given these factors, a contrarian strategy combined with risk management is prudent. I recommend a long position with an entry price of $106. The stop loss should be set slightly below the support level at $104 to protect against a continued downtrend. The target price should be set at $115, aiming to capitalize on a potential bounce from the oversold condition and a move towards the middle of the Bollinger Bands. This strategy leverages the oversold RSI and support level while mitigating risk with a tight stop loss. The portfolio is a combination of RSI and Bollinger Band strategy. Based on the historical data and forecast, POL-X-Matic shows a downtrend. The price has been fluctuating within a range but generally declining, with forecast prices consistently below recent closing prices. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands show that the price is approaching the lower band, suggesting potential for further decline. Considering these factors, I recommend a short selling strategy. Here's a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. We will initiate a short position at $0.0911. The stop loss will be set slightly above the recent high of $0.0965 at $0.0975 to limit potential losses if the price unexpectedly reverses. The target price will be set at the support level of $0.0889. This strategy aims to capitalize on the downtrend, with the RSI indicating an oversold condition and the Bollinger Bands confirming the price's proximity to the lower band. This provides a clear entry, exit, and risk management framework for a high-return investment. Based on the historical data and forecast, Virtual's protocol shows a downtrend with significant volatility. The price has been fluctuating within a defined range between $0.538 and $0.65, and the RSI consistently hovers below 50, indicating prevailing bearish sentiment. The forecast for the next week suggests continued downward pressure, with prices potentially reaching $0.501. Considering the Bollinger Bands, the price has been testing the lower band frequently, indicating potential for a bounce, but the overall trend remains negative. Therefore, I recommend a short selling strategy with a focus on capitalizing on the downtrend while managing risk effectively. My strategy involves entering a short position at $0.567, placing a stop-loss order at $0.581 to limit potential losses if the price rebounds. The initial target price is set at $0.529, aligning with the forecast for the first few days. If the price continues to decline, a second target price of $0.501 will be considered. The RSI readings consistently below 30 suggest that the asset is oversold, so a cautious approach is warranted. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk, given the current market conditions. Based on the historical data and forecast, Plasma shows a downtrend, with the price consistently declining over the past 2 weeks and a forecast predicting further decreases. The RSI consistently remains below 50, indicating a bearish sentiment, and has dipped into oversold territory several times, but hasn't triggered a strong reversal. The Bollinger Bands show the price consistently trading near the lower band, confirming the downward trend. Therefore, I recommend a short selling strategy. Entry price should be $0.0781, setting a stop loss at $0.0849, just above the lower Bollinger Band to avoid being triggered by short-term volatility. The target price should be $0.0711, aligning with the forecast price for February 19, 2026. To maximize returns, I suggest a portfolio that combines the 3 strategies. The core of the portfolio will be the short selling strategy, allocating 70% of the capital. The remaining 30% will be divided into 2 smaller positions. First, when the RSI reaches below 30, consider a small long position with an entry price of $0.0683, a stop loss at $0.0718, and a target price of $0.0812. Second, when the price touches the support level of $0.0812, consider a small long position with an entry price of $0.0812, a stop loss at $0.0756, and a target price of $0.0913. This diversified approach mitigates risk while capitalizing on potential short-term reversals. Based on the historical data and forecast, Trust Wallet is exhibiting a strong downtrend. The RSI consistently remains below 30, indicating a deeply oversold condition, yet the price continues to decline. The Bollinger Bands are widening, confirming increased volatility and a potential continuation of the downward trend. The support price is consistently at $0.467, and the forecast predicts further price drops to $0.385. Therefore, a short selling strategy is highly recommended. Our strategy will involve shorting Trust Wallet at $0.478. Given the strong downtrend and oversold conditions, we'll set a tight stop loss at $0.52, just above the recent resistance and the upper Bollinger Band. The initial target price will be $0.427, aligning with the forecast for February 16, 2026. If the price reaches this target, we will reevaluate the situation. If the downtrend persists, we'll move our target price down to $0.385, based on the forecast for February 19, 2026. This strategy combines technical indicators with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Kite shows a strong upward trend. The RSI consistently hovers above 60, indicating bullish momentum, and peaked at 76.9 on February 4, 2026, and 74.4 on February 12, 2026, nearing overbought territory. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for further price movement. The forecast data for the next week projects continued growth, with prices ranging from $0.179 to $0.198. Considering these factors, I recommend a long position with an entry price of $0.179. Place a stop-loss order at $0.163, just below the recent low, to limit potential losses. Set a target price of $0.198, aligning with the highest forecast price, to capture the anticipated gains. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, oversold, consider accumulating more shares, but given the current upward trend, this is less likely. If the price touches the lower Bollinger Band, it could be a buying opportunity, but the price is currently above the band. If the price breaks above the upper Bollinger Band, it signals a strong bullish breakout, justifying an increase in the target price. Therefore, the most efficient portfolio combines the long position strategy with the Bollinger Bands and RSI signals. This approach balances risk and reward, capitalizing on the prevailing upward trend while providing flexibility to adjust based on technical indicators.